green. But staying with the banking space, and one of the outperformers within this sector, and which is also a stock which is on all of our technical experts' radar, is a Federal Bank. Let's get in a sense as to what the business outlook is for the company. Mr. Shyam Srinivasan, Managing Director and CEO of Federal Bank, now joins in on the show. Thanks very much, Mr. Srinivasan, for being with us. To start off with, you've expanded your footprint quite a bit this year. Could you look now at taking advantage of your enhanced branch presence to increase your retail portfolio, and what products would drive that growth?
See, on the retail, we have taken 3-4 areas as our primary focus. One is gold loan in its conventional fashion. We're doing very well. We have launched what I would proudly claim is the most innovative gold loan offering in the country amongst any company, and we call it Easy Gold. The offering is very simple. It's an overdraft capability for customers which they use at will and pay only when they use, and all of it is through the ATM card or debit card. So they really place the gold in the locker of the bank, make sure that they get a line of credit and use it and pay when they use it. So I think it's a phenomenal product which is helping customers sort of move from conventional gold loan to a gold loan plus, if you will. Then the conventional home loans, we are now getting more aggressive about. We see the opportunity opening up, and in select geographies, home loans are doing well, and we'll sort of keep that growth. So gold loans, Easy Gold, home loans, and lastly on the liability side, given the launch of our rewards program called Utsav, we've seen good momentum, particularly in the tier 2, tier 3 markets, where the concept of getting rewarded for using your debit is gaining ground, and we're seeing good success there.
Right, now Shyam, looking at a couple of macro issues, the government has unleashed a slew of reforms of late. Are you seeing any of these actually translating into activity on the ground?
So when you look at the stock market, and if the indices are going up, generally it sends sentiment up. So I want to believe that given the more recent announcements and feel good amongst people improving, it will lead to some degree of enthusiasm, and given the busy season, the festive season coming up, you will see a lot more on-ground activity. Has something fundamentally changed on the ground? Not as yet. But has the sentiment improved, and is there hope? I genuinely think it is. And I think the equity markets are inspiring people to feel richer and therefore probably more active on the ground.
So do you feel that this sentiment change will eventually result in credit demand picking up in the second half of the year, especially on the corporate side?
True. I think credit demand picking up is slightly beyond just sentiment improving. It will play into it in the very long run. But, will people ease their purse strings immediately because some sentiment has moved? I would argue not. But will we see credit demand pick up in the second half? Vis-a-vis first half, which was quite lukewarm, certainly yes. Will big projects get rolled out? Will big projects all get sort of immediately off the ground? I think they are still looking for some more clarity and discipline and belief that they will hold on to some of the reforms. So I think that may take another 3 to 6 months to actually fructify. But will demand increase? Some of the inventory is running off, will require some replacement. Working capital requirements will come up. Small and medium establishments, if they see local catchments being active, demand will come up. So I would say large projects still watch.
Right, now Shyam, a number of banks are coming up with special festive season offers. Would you be looking at any similar move?
Yes, we are at this point, as I speak to you, making some attractive offers for our clients, because we usually celebrate the bank's Founders Day on 18th October, which we've done quite successfully. So effective 3rd October through the 18th, we have some very attractive schemes running on for almost all our products on the retail side, and that will coincide with the onset of the Puja and the Diwali season. So you will see some offers coming out. But at this point in time, we are all at base rate. So we need to look at base rate coming down to ensure that there are more attractive offers coming up.
So what are the chances of you bringing down your base rate? And apart from that, what are the chances of the RBI looking at a further rate cut by the end of this month? What are your expectations?
If you ask me, do I want Do I expect they are different? I think the expectations are they are beginning to show signs that they may play ball with what the government have taken some initiatives, but I think inflation remaining high may still be a cause of concern for RBI, because they have held a view that unless they see inflation sort of continuously trending in the right direction, they may not ease. But that said, I think there may be some cut on CRR, but that part I can't quite comment. But certainly if there is a reduction, that will pass through, and there will be a base rate cut which will further energize the markets.
And lastly, Shyam, give us a sense of the asset quality picture. Are there still some particular large accounts that are causes of concern?
We are in closed period, so I can't quite specifically comment on anything. Other than that, we've last 6 quarters demonstrated continuous improvement in our retail SME portfolio, and that trajectory continues. Corporate larger tickets have been choppy because in the past there was an Air India or specific large ticket that went into restructuring. And so that is more name specific and less sector specific. So we have not seen any reversal in that trajectory. So we are quite on course to how we've been delivering.
Mr. Srinivasan, thanks very much. Appreciate you taking the time out and giving us a perspective on your company. You've got a federal bank which is holding up very smartly in an otherwise subdued market. Let's take it straight then to Prakash Gab.